Have you ever wondered what really goes on behind the closed doors after a big company board meeting? Especially, for a fast-moving tech firm. One that actually calls itself Born Digital, Born Agile.
Right. It's definitely more than just ticking boxes. It's where the big strategic bets are placed, the financial health gets a checkup.
Exactly. And for a company like Happiest Minds, you have to ask, can they truly live up to that Born Digital, Born Agile idea while juggling, well, rapid growth, financial pressures, and bringing subsidiaries fully into the fold?
That's the core question, isn't it?
So today we're doing a deep dive into Happiest Minds Technologies. We're going to dissect their latest Q1 results for fiscal year 26, that's the quarter ending June 30th, 2025, and also unpack the key decisions from their board meeting on July 29th.
Our mission essentially is to pull apart those key financial numbers, understand the strategic chess moves they're making, like that amalgamation we'll get into, and really gauge the operational pulse of the company.
Yep. We'll pull out the most important bits from their official announcements, their investor decks, basically giving you the inside track without you having to sift through everything yourself.
A shortcut to getting up to speed.
Okay, so let's start with that board meeting on July 29th, 2025. We got a peek into what they discussed and greenlit. What were the main headlines coming out of that?
Well, what really stands out is this kind of triple focus. You've got financial transparency, strategic consolidation, and leadership stability, all wrapped up in one meeting.
Okay, break that down for us.
So first, the board signed off on the unaudited financials for Q1. That's for both the standalone company and the consolidated group, all done according to Indian accounting standards. Standard practice, but crucial for transparency.
Got it. Financials approved. What's next?
Second, they approved something called a scheme of amalgamation. Now, this sounds technical, but it's a pretty significant strategic step. They're basically merging Arias Systems Private Limited directly into Happiest Minds Technologies.
Ah, okay. Oriastech was already wholly owned, right? So this is about integration.
Exactly. It's about bringing it fully into the mothership, simplifying the structure. We can talk more about why in a sec.
And the third point, leadership.
Yes, leadership continuity. They reappointed two very key figures, Mr. Joseph Anantharaju as co-chairman and CEO, and Mr. Venkataraman as managing director. Both get 5-year terms starting this November.
5 years. That sends a strong signal about stability at the top, especially in tech where things change so fast.
Precisely. It locks in their core leadership team for a good long while.
Okay, let's circle back to that amalgamation. You said it's more than just paperwork. Why formally merge Tech into Happiest Minds if they already owned it completely? What's the real gain here?
Right, good question. It might seem like just shuffling deck chairs, but if you look at the bigger picture, the logic is pretty clear. It's all about efficiency and synergy, really.
How so?
Well, the main goals they stated are, 1, simplifying the management structure. Fewer separate entities means easier administration, potentially lower overhead costs, and importantly, standardizing how they do things, their business processes.
Okay, so streamlining operations. Makes sense.
And 2, it's about creating greater integration and financial strength. By pooling all the resources under one banner, they believe they can maximize shareholder value. Think operational synergies, maybe shared sales teams, optimized delivery, cost savings from shared infrastructure.
So reducing duplication, basically.
Exactly. And less complexity also means fewer statutory hoops to jump through, compliance stuff. It just makes running the overall group more efficient.
And just to clarify, since Ariastech was already wholly owned, this doesn't change the shareholding structure of Happiest Minds itself. No new shares issued.
Correct. No change there at all. It's purely an internal restructuring. And it makes strategic sense, too, because Ariastech's focused software design, development, IT services fits right alongside Happiest Minds' core business in digital transformation, AI, cloud, blockchain. It just brings all that capability under one roof formally.
Right, consolidates their offerings. Okay, so with those board decisions setting the stage, let's pivot to the actual performance. How did Happiest Minds do in Q1 of fiscal 26? Let's get into the numbers ending June 30th. Revenue, profit. What's the story?
The numbers definitely paint a picture of a solid start to their financial year. Their operating revenue in US dollars came in at $64.4 million.
$64.4 million. And how does that compare, say, year over year?
That's where it gets interesting. In constant currency, which, just strips out the effect of currency fluctuations to show the underlying business growth, revenue grew 17.5% compared to the same quarter last year.
17.5% year-on-year growth in constant currency. That's pretty robust.
It is. And quarter on quarter, it was up 2.3%. In Indian rupees, the total income was let's see, 57,993 lakhs.
Which is about 5.8 billion rupees, give or take.
Right. That's up 1.7% from the previous quarter and 18.5% year on year. So strong top-line growth, however you slice it.
Okay. Revenue looks good. What about profitability?
Also quite healthy. EBITDA, that's earnings before interest, taxes, depreciation, and amortization, was 12,405 lakhs. That works out to an EBITDA margin of 21.4% of total income.
21.4% margin. Solid. How's that trending?
It's up significantly from the previous quarter, 12.9% sequentially, and up 6.3% compared to last year.
And the bottom line, profit after tax or PAT?
PAT came in at 5,713 lakhs, which is 9.9% of their total income. Now, this showed a huge jump quarter on quarter, up 68%, and it was up 12% year on year.
Wow, 68% jump quarter on quarter for PAT. What drove that?
They also report an adjusted PT figure, which smooths out some non-cash charges or one-off items. That was 6,862 lakhs, or 11.8% of income, growing 19.1% quarter on quarter. The adjusted earnings per share, EPS, was 4.55. Using these adjusted figures probably gives a clearer view of the core operational profitability trend.
Got it. Adjusted numbers smooth out the bumps. And any other key financial health indicators? Debt, returns.
Yeah, they reported a debt-to-equity ratio of 0.78, which seems manageable, and their return metrics look decent. Return on capital employed, ROCE, at 23.0%, and return on equity, ROE, at 14.1%, which is pretty good capital efficiency.
Okay, strong overall numbers indeed. But Happiest Minds really pushes that born digital identity.
Yeah.
Well, how do these results break down when you look at their different business lines or their digital service offerings? Where's the growth coming from specifically?
Right, that's where you see the strategy playing out. Their biggest segment by far is still Product and Digital Engineering Services, or PDS. That brought in 76.2% of the revenue in Q1.
Okay, over 3/4 of the business there.
Yep. Then you have Infrastructure Management and Security Services, IMSS, contributing 16.3%.
Standard IT services buckets. But what about the newer, trendier stuff like AI?
Ah, yes. This is interesting. Their Generative AI Business Services segment, they call it GBS, now accounts for 2.3% of total revenue.
2.3%. Still small, but the fact they're breaking it out as a separate segment is significant, right? Shows focus.
Absolutely. It signals their commitment and likely their investment in capturing that Gen AI wave. And looking at their broader digital service portfolio confirms the born digital claim. Digital infrastructure and cloud services make up a massive 53.7% of the revenue.
Wow, over half their business is cloud-related.
Yeah, and SaaS, software as a service, is another 18.5%.
Yeah.
Analytics and AI together contribute 12.8%. So you can really see the digital focus in the revenue mix.
And geographically, where are their customers?
Still heavily weighted towards the Americas. That's 59.5% of revenue, so nearly 60% from North America, primarily. India is their second biggest market at 17.6%.
So strong in the U.S., significant presence in India. And how about the types of contracts they use? Is it mostly fixed-price projects or time and materials?
It leans heavily towards time and material, T&M. That accounts for 76.9% of their revenue. Fixed-price contracts make up the remaining 23.1%.
Okay, so mostly T&M. That suggests clients value flexibility, maybe for ongoing development or support work.
Could be. It often reflects an agile approach where project scopes might evolve. Lower revenue predictability for Happiest Minds, perhaps, but potentially stickier client relationships if managed well.
Speaking of clients and relationships, beyond the financials, what does the operational side tell us? We hear about the Happiest Minds culture, but how are they actually doing with managing their people and keeping clients, well, happy, especially with this growth?
Yeah, the people part is crucial in a services business. So operationally, as of the end of June 2025, they had 285 active clients, and they added 17 new clients just in Q1. That's pretty solid client acquisition.
Adding 17 new logos is good, but what about keeping the existing ones?
That's where the number is really quite striking. 93.7% of their business came from repeat clients.
93.7%. Wow.
Yeah, that's incredibly high. It's a huge testament to customer satisfaction and retention. It suggests they're building really strong long-term partnerships. It's like having, built-in loyalty programs.
That kind of repeat business definitely underpins the financial performance. And are these big clients?
A good chunk are. They mentioned having 85 clients who are either Fortune 2000 companies or Forbes $200 billion corporations. Landing and keeping those kinds of large enterprise clients shows they can operate and deliver at scale.
Makes sense. And the people doing the work? The Happiest Minds themselves? How many employees and how's that side looking?
They reported having 6,523 employees, or happiest minds, as they call them.
6,500 people. And the key metric everyone watches in IT services, attrition.
Right. Their trailing 12-month attrition rate was 18.2%.
18.2%. How does that compare?
It's actually a slight increase from the previous quarter, where it's 16.6%.
Nearly 1 in 5 people leaving over the year. Even with that happiest minds focus, 18% feels like a number they'd want to manage carefully, especially in a competitive market for tech talent. What do you think of the implications?
That's a very fair point. 18% is definitely a significant number in the IT services world. While some churn is always expected, and it's not uncommon in the Indian IT sector, that uptick is something management will be watching closely.
Yeah, you'd think so.
It means they need to be constantly focused on retention culture, compensation, career growth, all of it. But you also have to balance it against their growth and hiring. They're still growing headcount overall, and their utilization rate actually improved slightly.
Oh, what was the utilization?
It stood at 78.9%, up from 77.3% last quarter. So they're keeping the people they have reasonably busy, which is efficient.
Okay, so higher utilization offsets some of the attrition impact, perhaps.
To some extent, yes. It shows efficient deployment. They also highlighted their gender diversity at 27.3% and that 94.2% of their workforce is based offshore, mostly in India. This fits that born digital, born agile model, a distributed, cost-effective, agile workforce.
Okay, so we have the board decisions, the strong financials, the operational details with that impressive client retention, but also that attrition number to watch. Putting it all together, what's the leadership saying? What's their vision for keeping this momentum going, especially with that Gen AI focus?
Yeah, the leadership commentary really ties it all together. Ashok Sudha, the chairman and chief mentor, he called it a strong start to Q1 FY26. He put it down to customer confidence and their unique digital capabilities.
Okay, standard positive framing.
Sure, but he specifically emphasized their focus on generative AI and deep tech. And importantly, he reiterated their goal, aiming for double-digit growth for the year, and actually making it 3 consecutive years of double-digit growth. That's ambitious.
3 straight years of double-digit growth. Okay, setting a high bar. What about the CEO and MD?
Joseph Anantharaju, the co-chairman and CEO, he pointed to 10 transformations the company has gone through as a driver of their success, along with their specific strengths in Gen AI, data, and cybersecurity.
10 transformations. Sounds like a lot of internal change.
It suggests continuous adaptation. And Venkatraman Narayan, the managing director, highlighted their consistency, pointing out, quite impressively, 20 quarters of sequential growth. That's 5 years straight of growing quarter on quarter.
20 quarters. Wow. That is consistency.
Right. And he also mentioned their robust EBITDA and stressed their continued investment in, you guessed it, AI, and also strengthening their sales engine to keep fueling that growth.
So consistent messaging, digital AI growth, customer focus. Did they mention any specific recent wins that illustrate this?
They did. They highlighted a few key examples like building custom solutions for a big global home improvement retail chain, providing Gen AI services to a multinational logistics firm, and doing large-scale database transformations for a U.S. healthcare company. It shows the breadth of their work across different industries.
Okay, tangible examples of applying those capabilities. And any external recognition, awards, rankings.
Yeah, they've racked up quite a few. They won the CNBC TV 18 India Risk Management Award for 2025. AM Research called them seasoned vendors in data engineering. Everest Group ranked them as aspirants in intelligent process automation. Plus, ongoing recognition as a great place to work and for corporate governance, like the Golden Peacock Award they won previously.
So the market and industry analysts are taking notice too, adds credibility.
Definitely. It paints a picture of a company that's not just performing well financially, but is also well regarded for its capabilities, its culture, and its governance.
Okay, so we've really unpacked quite a bit here on Happiest Minds Technologies, their Q1 numbers, the board's strategic moves like the amalgamation, their operational health, client stickiness, that attrition metric, and the leadership's focus. It seems clear they're navigating this whole digital transformation space with a sharp eye on AI, keeping customers close and running things efficiently.
Indeed. You really see that commitment to being digital and agile reflected not just in the marketing slogans, but, down in the details, the segment revenues, the operational metrics, the strategic choices like consolidating RU stack. That focus on Gen AI and the sheer consistency of their sequential growth are, I think, particularly noteworthy points.
Absolutely. Which brings us to our final thought for you to chew on. In today's tech world, which is evolving so fast with AI and automation everywhere, just how crucial is it for a company to have this sort of mindful approach, focusing deliberately on both its people and its technology if it wants to achieve sustainable long-term growth and keep innovating?
Something to consider, definitely. How much does that happiest people philosophy really drive the happiest customers and the innovation engine in the long run?